Well, I think what we're likely to see is the authorities being much smarter about controlling the second wave coming through. Obviously, the first wave, people were still learning, but I think most people have learned a lot of what they're likely to learn now. And I think that authorities being much more savvy about closing off particular clusters rather than whole parts of the economy. So I think that's a good sign. And of course, individuals themselves will be more careful about their own personal uh, hygiene in terms of the virus. So I don't think the second and third waves may necessarily be as serious as the first. I think the market will probably just shove them off at the moment, and there'll only be a local impact every now and then when there's maybe an announcement.
What's your strategy then in this environment? Because just in the last 24 hours, we've seen, of course, rising case numbers in the United States, in parts of Australia, and where you are in Hong Kong as well for the first time in a while.
That's right. But I think that what we're seeing with the second wave is uh, the element of tracing is much better. And we kind of know where it's coming from. Okay, it may take a little bit of time to deal with it, but it looks as if the problem is controllable at the moment. So market's obviously going to keep an eye on it, especially if it takes longer to uplift restrictions on travel. That's probably the biggest thing at the moment. But I think it's something that the market knows about and has factored in. I think of much greater concern is the fact that the tech stocks seem to be the only game in town, and they're running away pretty well in markets all over the world.
Well, talk to us about Asian equities. Emily was just mentioning the tech picture when it comes to Hong Kong. Is tech a sector that you like, or do you think that it's too overbought right now?
Well, it's tough not to like it because it is where the future is. But I think you need to be quite careful of what you buy. Yes, if you're in the big fangs, I'd kind of hold on there. Some of the smaller ones, you're going to have a lot more discretion about what they do, whether they're going to survive in the new world. So I think you have to be careful there. But overall, it looks to me very much as if we are much more in a bubble in that area. We just have to look at what happened last night with the Dow down, the S&P down, and Nasdaq still up. These things are still continuing, and it does look to me as if there's a bubble forming in those tech stocks. They'll come down. They'll come down hard. They may not come down as much as we think, which is why people are still hanging on in there.
Right. So if it's a bubble, then when is it going to burst?
Well, that's the key thing, isn't it? We have obviously heightened geopolitical tensions at the moment. We're still just about at the stage where we're not too sure what the economics of the lockdowns are going to be. We're still seeing some numbers come out. Analysts are still saying that, look, well, okay, the second quarter was terrible, but third and fourth quarter will be fine. Yes, but that's going to put all your valuations completely out of kilter. So I think that the trigger is always, if we knew when it was, we'd be there. It's always out there. The authorities will try and prevent a big crash, but there certainly is enough on the menu to launch some kind of trigger, whether it's more virus, whether it's bad earnings, whether it's bad economies, whether it's geopolitics, with the American fleet heading towards the South China Sea. There's still a lot of uncertainty out there.